Hi everybody, thanks for joining me for another episode of Q&A with Oriana Shea. And today we're going to be talking about jumbo financing, and I have a guest speaker who's in the house. So I wanted to introduce you all to Josh Atwood with Finance America, who is back to help me out with another episode of Q&A, and we're going to be talking about frequently asked questions about jumbo financing today. So let's start with, what does your credit score need to be if you're obtaining a jumbo loan?
Good question. Credit is hugely important when it comes to jumbo financing. So ideally, we want to see a 760 or better. If you're a 720 or better, we've got some product for you too. And
if they're maybe just on the lower side of 720 or maybe in the high sixes, does it just mean a higher interest rate? Can they still get jumbo financing?
It becomes a lot more complicated with a credit score below 720. So when it comes to conventional financing, there are ways to do rapid rescores where lenders can say, oh, pay this credit card down $500 and that'll bump your score 10 points or things like that. But when it comes to jumbo financing, we don't have that flexibility. So when that credit is pulled, what that report shows is your credit score. So we really want to make sure before we get to that point that we have those ducks in a row for our buyers then.
And just a side question that I just thought of, because I get asked this all the time, especially buyers coming in that, hey, I have my credit report, I don't want the lenders to pull my credit yet. There's a big difference between the credit scores that you're going to see when you as a lender or mortgage institution pulls their credit versus them doing a free credit score online.
Absolutely. And not even free ones, even ones that you pay for that are credit monitoring or through your credit cards and things like that. So the bureaus sell about 150 different models. So whether that's for cars, for solar panels, for whatever it is, the bureaus sell about 150 different models. The one that we go off of, and they repackage a FICO score, FICO, they repackage a FICO score and sell that too. So on the lending side, our credit report generally is a more strict credit report. So what someone's going to see on a site like Credit Karma or something like that isn't necessarily going to be the same credit score that they're going to get going through a mortgage company.
And that can vastly impact what they could qualify for if the score, just depending on what the variance in the scores can be. It can be a very different story, right?
Yeah, absolutely. And I think just going into it, I think it's important for buyers to know that while you may have a good read on about where your credit score is, be open to what the lender says. I look at something like Credit Karma as like a thermometer, right? You look on your phone and you see that it's 78 degrees outside. Maybe you go on the patio and it's 82. So what is it? Is it 78 or 82? It's kind of warm. But what's not going to happen is, let's say you've got a 800 on Credit Karma, you're not going to come in at 500 with a mortgage score.
Right.
So we look at it like a temperature.
Got it. Talk to me about self-employed borrowers and jumbo financing, because this is another question we hear all the time. Hey, I'm self-employed. Can I get jumbo financing, and what are they going to need from me?
Right. So short answer is yes. Jumbo financing is available.
Okay, good, we're done.
For self-employed borrowers. There might be a little bit more to it. So when it comes to obtaining financing for self-employed, which you might know something about, right? Being a self-employed.
A little bit.
There's a couple of options that you have with a self-employed buyer. So you've got tax returns, right? And so we'll review income based off of tax returns. If you're someone who takes advantage of the tax laws and maybe your tax returns show maybe not, I don't want to say not the whole story, but if you take advantage of a lot of write-offs and you don't have a whole lot of positive income in there, then that's something that we have to take into consideration.
The tax returns are a must-have, though. You still need 2 years tax returns?
So you've got two options essentially. So if your tax returns are showing income, showing positive, then we can use those, and that's just going to be straight jumbo financing, right?
Okay.
We're going to go off of tax returns for that. We luckily have alternatives for that as well. So we have programs that we can use, bank statements. So we can use 24 months of bank statements showing deposits going in, and we can count that as your income. The lenders look and say, hey, we know that the tax returns might not show your operating income the same way to the IRS as you want to show the bank what that income looks like. And so we can use 24 months bank statements, business and personal, and count those deposits as your income. Now, there's a little bit of a caveat to that in that your interest rate's higher. So we're seeing those about 1% above where you would get traditional jumbo financing. If we're using bank statement loans, you're going to be about 1% higher. Now you might go, oh my gosh, that's going to kick them out of the market. Here's the conversation that we have with a lot of our buyers. You want to buy $1 million home. You're going to get a jumbo loan. You're going to need to show $200,000 worth of income on your tax returns, which means you're going to be paying $80,000 in taxes.
Right.
Or you can pay 1% higher, your payment's $500 more a month, and you pay the bank $6,000 more per year.
That's a good point.
So do you want to pay the IRS or do you want to pay the bank? You got to pay somebody.
That's what I love about you, because you break it down into real numbers. For somebody like me, who numbers are not my strong suit. How do jumbo rates compare to conventional financing?
So if we take the bank statement loans off the table, and that's its own category, and those are going to be for our clients who need that. Good news is we have those options, right? 2 years ago, the answer was no. So it's nice that we have those now.
Yeah.
If you're a traditional documentation W-2 employee looking to buy on jumbo loans, we're about an eighth higher, or 0.125. So about an eighth higher in rate compared to. No, it's great.
That's really good, really good. So do you, and this is another common myth, do you need 20% down necessarily to do jumbo financing?
No.
And I said myth because I already knew the answer.
So the short answer is no. Going into it a little bit more, looking at jumbo financing, lenders want to see 10% down. So if you've got 10% that you can bring into the transaction, then there is jumbo product out there for you.
Okay, what's the lowest amount that you can come in with for jumbo financing?
So again, it would be 10%. Yes.
Okay, so there is no 5%.
No, sometimes we can break loans up where we do a conventional first mortgage and then an equity line second mortgage. And so that can get people up higher to something like a 5% down option. So that can be something that can help with what may be considered the jumbo space, but isn't necessarily a jumbo loan.
You could do something creative, like with a second to cover the difference to get to the 10%, possibly. Right. Okay. So we've been talking about conventional and jumbo financing. Where are the benchmarks in loan amounts in terms of conventional and as you move into jumbo, and there's something in between there too? Yeah,
there is. So this is, so loan limits are set by county and they're set every year. So depending on what happens with the market as it moves, the new loan amounts are set every year. So you have a conventional loan, which is going to be a balance of $548,250. So a loan amount of $548,250 or lower is going to be considered conventional financing. Okay. Then we have a middle ground, which is what we call our high balance. So that's going to be up to $822,375. So a loan amount of $822,375. This is for LA and Orange County. When you start to move out to Riverside, San Diego, those numbers change slightly, but this is going to be LA and Orange County. Those are the numbers.
Is high balance what everybody was calling jumbo conventional, or?
Yeah, there's a lot of different names for it. People will say, you know.
It's not quite jumbo, but it's a higher balance conventional loan, and it's up to $822.
$822,375.
And are the rates for that similar or on par with conventional, or are they a little bit higher?
They're similar or on par.
Okay.
It kind of depends. I mean, once you get into that, you start looking at down payment, you start looking at credit score.
Right.
So it's possible that someone could be getting a loan for $822,375, and the rate's going to be the same as if it were $500, depending on credit score, down payment, that type of a thing.
Got it. Great. Josh, thank you so much for joining us again. And thank you guys for joining us for Q&A with Oriana Shea again today. And as always, please like, subscribe, or comment down below. See you next time.